Jon Cox, next question, but Andrew, I'm sure you've got loads of questions for him as well. Jon, first up, who would you rather be today, a Cadbury shareholder or a Kraft one?
You know, I think from today's perspective, you know, I'd rather be a Cadbury shareholder. Obviously, you're going to get a good sum, £8.50 odd for your shares, £8.40 plus that 10p dividend. I think on a standalone basis, Cadbury is probably worth £7 per share. And I wouldn't be surprised to see some of the Cadbury shareholders maybe quietly talking to Cadbury and saying, look, you know, above £8, around £8.50, we'll do it. Because we're probably not going to see that price for a couple of years. So certainly, from today's perspective, I'd rather be a Cadbury shareholder. Obviously, you know, in the greater scheme of things, you know, Cadbury probably didn't get quite what they would like to have got. They were a bit hamstrung all the way through, basically because there was no counter bidder. So from that perspective, I think Cadbury board got probably the best possible offer for their shareholders, although they had a bit of a bum deal in terms of the fact there was no counter bidder there.
And Jon, can I ask on that counter bidder there, do you think that the board would have, Cadbury's board would have recommended this deal unless they were absolutely positive that Hershey wasn't coming out with something, or something attractive at least?
No, I totally agree with you, Andrew. I think basically Cadbury wouldn't have recommended this offer unless they were pretty sure that Hershey was not going to come through with an offer that at least matched Kraft's offer. I think probably within Cadbury they'd rather Hershey come on board. But, you know, Hershey, I think, was probably paralysed by internal division. You probably saw the reports yourself. The trust seemed to be in favour of that deal, but maybe some of the Hershey management weren't, and I think that tended to paralyse them. So I think at the end of the day, they thought, no, we won't go for it. They probably communicated that quietly to Cadbury, and that's why we saw the deal move so quickly today.
And I have to say today I've been speaking with a lot of investors, including our Mutual Series, which is the unit at Franklin Resources that holds Cadbury's largest stake. And they said, yes, they would have wanted more, but when it came down to it, they are going to accept the 850p, and it's better to take 850p now instead of waiting 12 to 18 months for the shares to get their own. Do you think a lot of other investors will probably end up taking that same view?
Yeah, no, totally. I think actually Bloomberg, you guys did a survey a few days ago saying that, you know, the most of the sort of long-only shareholders were looking for £8.50 as a minimum, so that became a line in the sand. I personally think that was slightly higher than I had anticipated. I think the reason why it moved so quickly is basically, you know, you had suddenly Hershey maybe at the beginning of the week wanting to get involved, and I think that probably triggered the move by Kraft to basically, you know, come forward with that deal. But I think most shareholders would certainly sign on at £8.50. For me, you know, the fat chocolate lady, as it were, is singing.
Jon, last question. Have you been in touch with Cadbury's headquarters? Are you getting a sense of the mood there very quickly?
Yeah, I get the impression the mood within Cadbury is probably somewhat despondent. You saw the war of words between these two guys, and as I say, Kraft is probably not what they would have really liked. But at the end of the day, you know, these things happen in finance and business, and I think they probably have to get up to it.
Jon, thanks a lot for that. Jon Cox there, Kepler Capital Markets.